Generally speaking, a buyer obtains financing for a real estate transaction from some sort of financial institution. Borrowers will either get loans from private organizations or through the government. Banks, savings and loan associations, credit unions, and real estate investment trusts are all examples of private organizations that offer funding in the form of loans. While the federal government doesn't actually originate loans, several federal programs provide a form of insurance for certain qualified loans. This reduces the risks associated with lending out money, since the U.S. government will reimburse a lender if a borrower defaults on a government-backed loan. Because homeownership has been considered to be at the core of the American dream, the government has provided a variety of options to assist homebuyers in achieving that dream, with assistance particularly focused at certain groups, including, but not limited to, first-time homebuyers, veterans, and Native Americans. The Federal Housing Administration is a government agency that insures mortgage loans. In fact, the FHA is one of the largest insurers of mortgages in the world and has insured over 47 million home mortgages and more than 48,500 mortgages for multifamily projects. While the FHA does not actually issue loans, they do have a listing of approved lenders whose loans they insure. This means that the FHA will offset some of the lender's risks by financially compensating the lender if the borrower defaults on the loan. The reason behind this is that they want to increase the availability of loans by reducing the risk associated with lending, especially for people with low incomes. For people interested in home ownership, FHA loans can be an attractive option since they tend to have lower down payment requirements and less stringent qualifications for buyers to meet. These are especially good benefits for first-time homebuyers in particular who may not have enough capital to secure a loan from a private lender. The down payment requirement for an FHA loan is 3.5%, which is much more attractive than the traditional 20%. USDA loans are another popular loan available through the FHA for homebuyers with low to moderate income who reside in rural areas. These loans can offer up to 100% financing for qualified buyers. The Department of Veteran Affairs is the second largest department in the executive branch of the government and provides numerous services to veterans of the U.S. military. One of these services is to insure loans from qualified lenders for both active members and veterans. Some benefits of the VA loan program are that borrowers are not required to come up with a down payment or buy mortgage insurance. And similar to the FHA, the VA will compensate the lender if the borrower defaults on the loan. Additional rules established by the VA limit the amount that the borrower can be charged for closing costs. And the lenders of VA-backed loans cannot charge a penalty if the borrower pays the loan off early. The Office of Public and Indian Housing is a subsection of the Department of Housing and Urban Development, or HUD, and it manages and administers a multitude of housing programs. These housing programs are funded by Congress under the basic provisions of the U.S. Housing Act of 1937. One of their main programs, the Indian Home Loan Guarantee Program, is an FHA-style program through which it insures mortgage loans made to American Indian and Alaska Native families, Alaska villages, tribes, or tribally designated housing entities. These loans can be used for new construction, rehabilitation of a home, purchase of a new home, or refinancing. Additionally, the location of the applicant doesn't affect the loan they receive, and the mortgage loans issued through this program are fully guaranteed. Hopefully, we've explained the basics of popular government-backed loans that are aimed at specific groups of individuals. These programs all aim to help those who are not able to secure private financing overcome obstacles to homeownership.